Hi everyone, welcome back. You're watching Markets at Noon on ET Now. 5paisa.com. This is a company that is in a very relevant business, and that's, one among many things, is providing a digital investment platform for a lot of individuals. The last couple of days we've been highlighting on how digital trading, or rather just trading activity, has seen quite a sharp surge, thanks to, of course, the advent of all these digital investment platforms that basically hand every individual the power to conduct trading in the equity markets in the palm of their hands. That's basically in their mobile phones. Hence, we decided to bring on board the CEO of 5paisa.com, Mr.Prakarsh Gagdani, to talk about this new event that we are witnessing. Mr. Gagdani, thank you for joining us today on ET Now. I'm sure you as well have seen all those telltale signs, in this quarter gone by, especially during the lockdown, that's between April and June, of retail trading activity increasing quite a bit. So if you could tell us about that, did you as well see an increase in the accounts that were opened with 5paisa.com, especially on the digital platform?
Thank you. Thanks very much for having. And last 3 months, on one hand, has been really bad. Otherwise, if you see, because of the COVID pandemic. But in the market, it is exactly opposite. There is exuberance. There is a huge retail activity that is happening. June month happens to be the month where highest demat accounts were open across the industry. For us, we have also seen that almost 100% jump in the customer additions that we used to do. The overall activity in terms of client trading, turnover, everything has gone up substantially. And I feel that is, it started predominantly because of the opportunity it gave for retail investors to invest into blue chip companies which were available at almost like 50-60% down than their even February, January peaks. So that was an opportunity, and then what followed up is a huge rally which happened approximately 40-45% upside in the stocks. So retail investors love this kind of volatility and opportunity to invest. And the biggest factor is today all of them are at home and with very, very less investing opportunities. And capital market looks to be the best place to be at this point in time. So that is the reason you see that kind of exuberance on the street.
And is that trading activity continuing, that heightened trading activity? For example, daily turnover as well. We had a SEBI chairman interview yesterday to Economic Times, where he spotted this massive surge in trading activity, and more importantly, the lower ticket ones, those that have a turnover of less than 2 lakh rupees. So is that continuing in July? And secondly, what sort of account openings did you see, during this lockdown, this April to July period?
So as we see in July, things are continuing because overall the cash market turnovers have gone up substantially in the month of June, and the activity continues. And it is a pure reflection, and the trading activity is normally a reflection of the stock prices movement. So till the time you have volatility and prices going up and always being available at an attractive price, I think retail activity will continue for some time at least. As far as we are concerned, as I said, we saw almost 100% jump in our account opening. We added almost 1.6 lakh plus customers in last quarter, which is the highest ever acquisition numbers for us. And most of them immediately started trading and coming with a lot of margins and capital and taking the benefit. But what we are also seeing, which is a healthy trend, is that though the ticket size of the customers is less, but they are investors. They are coming in a cash segment and buying shares in stocks. So it is lesser of trading and more of investing, which is a healthy trend.
Right. How are you upgrading your systems at this point of time? Because the traffic suddenly would have increased. How are you upgrading your app on a daily basis so that people are more facilitated to get all the information that they need from the exchanges, or just to make them more comfortable using this one same app? How are you investing into that?
A very valid question, because what happens is that the retail activity suddenly spurts, but the backend infrastructure takes time to scale. So what we did after we realized somewhere around April that this is a trend which is going to continue, we started investing into upgrading our infrastructure creating a lot of, even for our customers to trade on app, we started, building features. And the maximum work which has gone and the investment has gone is in scaling up our backend infrastructure, which involves your exchange connectivity servers. So because we know that, even the load can go up by 100% tomorrow. Even that's the kind of exuberance that we see. So our current investment for last 3 months, and also it is continuing right now, is to build up the infrastructure which can take this kind of exuberance from the investors. And along that, we are also, because we are predominantly a mobile app driven company, and almost 80% of the business happens on the mobile app. So that's a very, very important platform for us, which we are scaling up in terms of new features, and also making it more robust, so that even if you are sitting in the remotest place in the country but having a okay 3G connectivity, you will still be able to trade.
Right. Also a word on, the point that you were making about the retail investors, select HNIs who have increased their activity in the market. Is it a shift that's happening from, say, mutual fund or some of the other places where they used to invest, maybe even credit funds, because they have not done particularly that well, and they're taking the markets on their own, saying that probably they could earn better returns than some of these fund managers if you look at the last 10 years data, because in month of March, the returns of mutual funds also became pretty bleak for 3 to 5 years.
It will be difficult to exactly pinpoint the reason for this, especially when in the June month you see that the equity fund investments on the mutual fund side came down to as low as 240 crore. But I think that shift was predominantly by HNIs and by businesses. Some of that must have definitely shifted to direct equity, but a larger portion I feel would be more of a business call. The HNIs or maybe corporates or institutions must have taken for their businesses. But if you see on the retail side, the SIP numbers are almost the same, approximately 7,900 crore. Even at our end, we have not seen a lot of redemption on our mutual fund. So I think retail is not shifting from mutual fund investments to direct equity. Rather, they are pumping in new, fresh money into retail activity. Having said that, for HNIs, yes, there would be some shift happening from mutual funds to direct equity. One of the reasons is that the investment into mid caps and small caps. Most of the funds are invested into large caps, and that's where most of the investors are also invested in. But what has happened is that in the last 4 months, the mid caps, small caps have performed. And there are some good quality companies in these sectors which have performed well. So if you want to actually make money by investing in these companies, direct equity is one of the way to go. And a lot of HNI customers would have done that.
Right. Thanks so much, sir, for taking our time for us. Always good to get perspective from you. That was management at 5paisa.com. Of course,
Thank
the stock has almost doubled, given 200% returns from the March lows, and the June numbers, of course, which came out, were looking pretty strong. On that note, we're taking a break. Stay tuned for all live updates. As we leave you, Nifty is down 181 points.